Tonight's class is going to be on trade risk portfolio management for a small account versus a large account. Because we've had a lot of issues, like people, they'll join us and they'll grow their small account. They'll get it up from, $2,000-$3,000 up to $50,000 to $100,000. And then they trade it the same way they would with a small account. And I really want to focus this class tonight on how to manage and how to really trade a small account versus a large account for you guys. So first off, guys, we're going to go over how to trade a smaller account, like a $2,000 account, compared to a large account. Let's say like a $10,000 or higher account, or that's supposed to be $100,000 or higher. So 2,000 versus a $100,000 account. Okay. A small account, $2,000 or less, this has to be set up as a cash account, okay? A cash account is a non-margin account. It's level 2 options, meaning you could trade calls or puts and covered calls. A lot of people don't understand this, but this is able to avoid that pattern day trade rule here. So if you're able to avoid that pattern day trade rule here, you're able to make as many day trades as you want as long as you have the cash available in your account. So with a non-margin cash account with that $2,000, technically you can make as many trades as you want up to that $2,000. Okay. So with a small account, we have to be focusing in on 10 to 20% into a trade. So if you're doing that, $2,000, let's just go in the midpoint there, 15%, that's $300 per trade. That's really important because in the slides that are coming, you're going to see what that small trade can make you if done properly over time here. So if you have a $2,000 account, I want you to focus in on one trade at a time. I want you always to be looking for the chart setups over quantity. I got way too many people that join, and then what they start doing is they start making 5, 6, 7, 8 trades. And you can't be doing that with a small account. Your goal is to grow that small account as quickly as possible, get it to that $5,000 to $10,000 range, and then we have some new opportunities, different types of strategies that are going to open up for us to start trading. So I really want you to focus in on one trade at a time here, okay? Always quality over quantity. Okay, now what I want you to do is use outperforming sectors to find those good setups. So market is the news driver here. That's what's going to drive the markets up, down, and certain sectors, certain industries. Use our cycles for swing trades and use the breaking news for quick day trades. When you have a $2,000 account, you don't have the luxury or the opportunity to go and make 5 trades and trade all over the place here. If you want to grow that account, you got to be focusing in on swing trades for the new cycles and breaking news for the day trades. Okay. And when I say look for the outperforming sectors, that's as simple as going over here to FinViz here. And you could look at the heat map. If you look at the heat map and you click on this here, you could see each sector and each industry within that sector. So I really want you to focus in on, okay, what sectors are outperforming the market and which ones have news out that might be running higher. And as you guys know, we were talking about healthcare the other day, right? Look at UNH. Those of you that are with us, we were talking about a few in our class the other day on safe haven stocks. So on safe haven stocks, we were going over a couple of different sectors. We were going over the utilities, and that's how we ended up finding our NextEra trade. We were going over some of the healthcare like UNH, and we were going over some consumer staple stocks like Walmart, Procter & Gamble, Costco, PepsiCo, and Coca-Cola. Okay, so that's really important to be focusing in on what the market's doing. Okay, so going back to that news, here's from yesterday. Okay, so yesterday, Boeing announced that they're facing some challenging terms coming up here Okay, so Boeing forecasts challenging near-term aerospace market. Boeing highlights Boeing market outlook for commercial services are cut. So they're really pushing that. And that was at 1101, 1102, 1103. And if you take a look here at this chart, this is that 1102 to 1103 area, right? So this is the actual stock. It was right at around 174 to 175 when that news came out. So that news came out here at 1101 to 1103, and that stock is trading right there. Now, here's the thing. If you're listening to that news and understanding, okay, you know what? Think about the larger institutional funds, the hedge funds and whatnot. You think they're going to be holding on to Boeing if they're predicting these challenging near-term times here and cutting their outlook? Nothing positive came from that. They're saying, oh, they could see opportunity, market opportunity. Boeing sees 2.6 trillion market opportunity for defense and space over the next 10 years. Boeing sees $3 trillion in market opportunity for commercial government services over the next 10 years. But honestly, they have no idea what's going to happen in the next 10 years. We're focusing in on what's happening right now. And what they're focusing in on and saying is they're having challenging near-term aerospace market. So when you heard that news at 1101, that's your opportunity in a small account to say, hey, you know what? I'm going to jump into those puts and take advantage of that breaking news. Now, here's the thing. Over to the right here are the Boeing October 16th, 172.50 strike puts. So these are the puts that are going to make you money as the stock drops. So when you hear that news, remember, this news that you're hearing, this is coming straight from Bloomberg. It's coming from Thomson Reuters, or it's coming from the company itself. This is a live news wire. So this news that we're hearing is coming out before it's anywhere else, before it's on the news, before it's on any website. We're hearing it right here first as it's happening. So, once that happened at 1101 to 1103, it took a couple of minutes for it to digest in the market and get put out there. And then look what happened with shares of Boeing. They went from 174.50 all the way down to almost 165, So now here's the thing. Those Boeing puts right down here, they were going for about, let's see, I can't get my thing up, but let's just say they're going for about 525 here, right? They're going for about $5.25. So that means this is only going to cost you about $525 for a single contract. Now, where is our close? You guys know we have a trade plan. We follow a trade plan for a reason, okay? Our trade plan, when we're in breakdown momentum, we're going to exit out of those puts with the first candle with the body above the 10-day simple moving average. So right here is our exit. Okay, so that's right at about 1130. So you see over here at 1130, we're trading out, let's say, when it's this one right here, about 975. So 9.75, right? And this is the wrong chart. This should have been the October 9th Expo. I don't know why that one was pulled up here. This should have been the October 9th Expo. I put in the wrong chart. But still, even if you're going out with an extra week, obviously you're not going to have a large of a gain if you're going with this week's Expo. But even if you said, hey, you know what, I want it to be a little bit safer in case the stock goes against me, and you wanted to get a further out expiration, you'd go with the October 16th. So that October 16th, you were able to pick that up for $5.25. And then when you got your sell signal here, that first candle above that 10 on BDM, when you're breaking down, like I said, you're not selling until you get that first candle with the body above that 10-day simple moving average. So look at what you were able to do with that news off of Boeing. You were able to jump in for $525. And then literally, let's see, that's at what, about 11:03. About 20 minutes later, you're able to sell that put for $975. So you just turned $525 into $975. Yeah, 975 minus 525, that's a $450 gain on that one trade. And that's in 20 minutes. Now, here's the thing, guys. You guys know how much I tell you guys about patience and discipline and following the trade plan. The thing is, there's going to be some days where you're just going to be sitting and waiting for the news. If you want to grow that small account, do you notice how whenever I'm trading, I have the main account pulled up most of the time here? And then, you know, I'll say, hey, I'm going to go log into my Trade Challenge account, right? So what's really important there is being disciplined. That smaller account, you're waiting and being patient and disciplined, waiting for those news setups. Breaking news like this that you're seeing on Boeing, this is where you want to take advantage of a short-term trade, a day trade, and trade off that news event. Okay, so that small Trade Challenge account, or that small account that you have, that $2,000 account, I want you to wait for information. If you're day trading, don't worry about anything except the news. That's really important, guys. That news is going to be that driver for you going forward for those large gains. Treat your small account as a baby. And I really mean that. I want you to nurture it and protect it, because too many people, you know, they might start with a $2,000 account and then, you know, they just get reckless with their trades, you know. Look at this. So this is one of our first trade. This is our first Trade Challenge account that we ever did. We're doing our second one right now. But here's our realized gains for the entire month of December when we started it. We started it in November. And look at this. For that whole month in this Trade Challenge account, I took a $2,600 account. I took $2,600 into over 55,000 in just about 2 months, 2.5 months. Okay. And this is what I did. You could see here, I had one losing trade for that entire month of December, the entire month. And what really upset me about that trade is if I held on to it for literally about an extra 3 hours, that would have been a green trade there. But you know what? I followed my trade plan, and that's what's really important. Now, going back here, you know your targets and know your stops before you enter into any trade. You know what I've been doing lately. I've been posting a chart in the trade room with you guys. I've been showing you guys, here's our target, here's our stop. And I want you guys to be able to follow those stops. Okay, it's really important for you guys to follow those targets and follow those stops. Okay. Now you see here also, here's the price, the net amount for each of these trades. You'll see when I was growing this account here, you know, this is going into the second month. So I probably went from about 2,600 up to about, you know, 8,000 or 9,000 during the month of December. So I'm making a little bit larger of day trades. So day trades, you know, it's okay to go to a little bit larger here, but you could see date opened, date closed, December 26th, December 26th, you know, quick gains in for $34.95 out of $37, made a quick $397 on those two contracts. You know, look at this one here on Amazon. Then I used those profits and I got out a little bit further. December 26th, December 26th, in for 49, out at 71, made $2,189 on that trade. You know, it was a $4,900 trade, closed it out for over 7,000. Here was the big one now. This is what I was talking about, cycle changes, which I'm going to go over now in the back of us. So Boeing, this was a huge trade here for us. I mean, that made us a $9,134 profit on Boeing there. And if you could see, we got in that on November 30th of 2018. We got in for $6.20 a contract. That means it only cost $620 a contract. We got 5 of them. So that trade was a $3,107 trade. We closed that out the next day because we got in that Friday. We closed it out on Monday for $24.50. That $3,100 turned into $12,242 basically overnight from Friday to Monday. So 24.5, divide that by 6.2. That's a 295% gain there. And then you could see, what am I doing here for most of the part? I was looking for news, and this was all news-driven stuff. So the Boeing, Amazon, that was all news-driven. That was news-driven trades. You see what I did then? I was focusing in on Diamond ETF and Qs for the most part. I was making quick in and out trades, following the market there, looking for those big setups. Same thing here, December 21st. You know, I used the profits from that trade into the next. Because see, the important part is, if you're going into a trade, see how this trade was 2,400, this one here was 2,175. So I used the profit up here, which is about 1,200 bucks. I use that to fuel this trade, because remember what I say, if I have $1,200, right? If I made $1,200 on a trade, the next trade I make is 2,400, right? Our max stop loss is 50%. So if I take a loss on that trade of 50%, what am I left with out of that $2,400 trade? I'm still left with $1,200. So all I did was lose the profit from that first trade I made. And that's what's really important about being disciplined and following the trade plan. Now back to over here. I want you to be focusing in on a quick 25 to 50% gains. You know, like when you see us here doing a normal trade in at $1.32, out at $2, what is that? 2 divide that by 1.32. You know, that's a quick 52% gain. You know, when you get those breakouts in the market, you know, obviously you can't control if you make more than 25 to 50%. But, you know, look for those quick gains and lock them up quick. Too many people hold on to their trades and then their trades go against them and they're like, I should have taken the profits. I should have done this. I should have done that. But once you get a 25 to 50% gain, I don't care what size account you have, lock that in, because those profits are what's going to fuel those next trades. And that's really important for you guys to remember that. On a 25% gain on a $300 trade, that's a return of 75 bucks. You know, you see what I did over here, you know, but let's be realistic now. You know, if you're a new trader, you make a $300 trade and you make a quick 25% gain, that's 75 bucks. You know, if you're able to patiently wait for 3 setups like that per day, that's going to net you about $225 per day. Okay. And that's really what you're looking for on these small accounts. Too many people, they're, you know, too many traders, they want to get rich overnight. They think, okay, I got the $2,000 account. Let me get it up to $5,000 tomorrow. You know, and that's, you could do that with options. That's the beauty of options. You can make large returns. But if you want your account to last, and if you want to keep growing your account, and if you, most importantly, want to trade for a living, the most important thing is to be disciplined and patient and wait for those good setups and follow your stops. If you do this properly for 1 week, that's $1,125. And guess what? If you have a $2,000 account, $2,000, and you make $1,125 in a single week there, 2,000 plus 1,125, that's $3,125. Divide that by 2,000. That means you made a net return that week of 56.25%. So if you're able to make that type of return, but that's what I want you to focus in on, because if you're able to grow your account consistently, you know, within the second week, you're going to double your account already. If you're making $1,125 a week with a $2,000 account, you're doubling your account within 2 weeks. And that's easily doable if you're looking for those 25% returns. But you're only going to find those 25% returns if you're focusing in on what I'm talking about back here, which is looking for these news events. You know, these day trades, these are what's going to fuel those big gains, are looking for those day trades with those big types of moves there. Just like Boeing, that's an 87% return. And the nice thing about it, guys, is with our trade plan, here's where you got the news, right? This is where you got that news. Now, guess what? here's our trade plan in effect. There's that 1020 cross. Let me clear that out so you can see a little bit better. There's that 10-day yellow simple moving average crossing below that blue 20. Then here's that yellow 10-day simple moving average crossing below that red 50 SMA. So here's your entry right here on those puts if you're just following the trade plan. Even without that news, there's the trade plan entry. But with that news, you're able to get in even a little bit earlier before it comes on mainstream media. Okay? And then like I said, when you're trading puts, remember what they say, down like a rock, up like a feather. So when we're trading puts, I want you to focus in on looking for that first candle above the 10-day, because when we're dropping hard and we're staying below that 10-day simple moving average. Now, that first candle above that 10-day simple moving average with the body above it, that's your sign. Hey, let me get out of that quick day trade, lock in my profits. And you saw down here, you were in at 5.25 and you were able to get out at 9.75. And just by doing that alone, that one trade took you from $525 up to $975. But don't try to double your account in a day and take that risk of blowing your account, because it's not going to work for you. I'm telling you right now. Focus in on those day trades driven by news and the swing trades driven by, you'll see what we're going to go over now. So when you're managing your small account, guys, I want you to treat trading as a business. This is the most important thing, because if you're sitting here with me every single day, obviously you're doing this for a living, okay? And you have to do your morning research. Every morning I come in, first thing I do is put on my Benzinga. I watch the news. I see what Bloomberg terminals are doing. I see what Thomson Reuters terminals are doing. It gathers all that information. I write it down in front of me and I do my morning market report. Okay? See what's going on in the morning, because the most important thing is your upgrades, your downgrades, because all that's going to be coming out early in the morning. That's why we send our newsletter out. When we send our newsletter out, that's everything that we see moving that morning. And that's the stuff that you got to say, okay, here's today's watch list. Here are the stocks I'm watching today. This is what's going on in the news. This is what's coming out in the market. And these are what I want to focus in on. Because guess what, guys? Market is driven by supply and demand. Okay? So if the market is pushing out, oh, hey, whatever stock, whatever stock it is. If they're saying, hey, Boeing is struggling, blah, 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 they're cutting their outlook, obviously that stock's going to go downward. It's totally news driven and market driven. Okay. So as more people start seeing that news, they start buying, and then that shoots the price of the shares higher. So that's why it's so important when you come in the morning, get a head start on the market. Say, hey, this is what's going to be on the news today. This is what's going to be driven through all social media outlets today. So when you hear that information, use it to the best of your ability. Okay, so when I say treat trading as a business, I want you to be able to come in every morning, either print off our newsletter. It's all there for you. We've done the work for you. Print off that newsletter and then make your watch list with the stocks on that newsletter. Check out our top news for the day. That's in that section. Okay, look for market movers every day. First thing I do when I come in the office, I put on CNBC. I look through that scroller there, because obviously I'm a trader. I trade momentum. So I don't trade every single stock out there. I got my watch list of favorite stocks I like to watch, ones that I don't. So make sure you're doing your morning research, looking for market movers. And most importantly, the upgrades and downgrades. Obviously, you're looking for the best of breed of the upgrades and downgrades. Any type of upgrade, downgrade, they're not all created equal. You want to look for those best of breeds, like NVIDIA, for example. Take a look at NVIDIA. They upgraded this the other day, and look at what it's doing. It came down to that 10-day simple moving average. It came all the way down to $5.20 a share. It's at $5.60 now. They upgraded that to $600 a share. So there's no question in my mind that we're in that breakout momentum cycle, because obviously you could see here, we got the 1020 cross. We have the MACD cross. We had our first candle above the 1020 50 SMA. There's our entry, 3 checks. and that's equals our entry. Now, what happened was you got that upgrade as well to $600. So when you got that upgrade to 600, that's where you're saying, okay, I want to get something maybe a month out and look for that target that the analysts put on it. So if they put a $600 target, this is going to be your target going forward for those shares. So you're able to capture that big run there from that upgrade, and you're still going to be able to capture even further. And the nice thing about it, like going back here, let me go back to that example I wanted to go over here on that account here. Boeing, we got into this trade at November 30th of 2018. We closed it out December 3rd of 2018. This is the one we got in for $6.20 out at $24.50, right? 24.5, divide that by 6.2. That's a 295% gain. I want you to go back there now and look at that chart and see what we were looking at. So November 30th, we were in, December 3rd, we're out. So let's check that. I want you to see what I was seeing there. And obviously there was some type of news that came out as well. So here it is back here, 2018. So this was the first candle above the 1020 SMA. Okay. We had the MACD cross. We had the first candle above 1020 SMA. We didn't get that 1020 cross yet, but as you can see, Boeing was really having some momentum. I mean, it climbed from about 310 a share. This is 310, and then it climbed all the way up to 350 here when we got in. So it had a 40-point climb, which is over a 12% climb in the stock from 310 to 350. 350, divide that by 310. That's a 13% gain in the stock from those lows right there. So when I saw that, and then I saw that first candle above that 20 SMA right here, this is where I entered. And then what's nice about that, here is the third right here. So take a look at this. If you look here, this is where I exited out of that trade on December 3rd. So we got in at November 30th and we were out on December 3rd. So that was literally a one-day trade that made a 295% gain. And that's what's really important about following that trade plan. You know, we're just capturing that quick momentum there overnight, making that big gain. And as you can see, that paid off huge. That was a trade that ended up, we bought it for $3,100, sold it for $12,242, a net profit of $9,134.79. So that's what's really important, guys. Watch for those breakouts. Watch for those things that are really moving, okay? Look at unusual options activity. Unusual options activity, guess what? This is going to tell you what the big funds are buying, because this is only going to come up if there's a lot of people buying contracts. And remember what I told you guys. You know, if a big hedge fund comes in, what they usually do is they'll say, hey, let me buy $5 million worth of, you know, whatever options. Let's say Amazon options, okay? Or whatever stock it is you want to pick, anyone you could imagine. You could say Nike, okay? They say, hey, let me buy $5 million worth of Nike calls here, okay? Then what they do is they upgrade the stock, and then they buy $25 million worth of the shares. And then obviously when they upgrade that stock, you know, more people from the outside are jumping in. They already have the calls because they bought the calls. They frontlined it there. So they bought the calls ahead of doing all this, and then they did the upgrade, and then they bought the shares to lift the price higher. And now those options that they bought for $5 million are now worth $30 million. So always look at unusual options activity. That's going to give you a good sign if either institutions, hedge funds, or retail traders are jumping into that. And that's really important. And like I said, too, I want you to look at outperforming sectors and industries. And we do this simply by looking at our heat map. Our heat map here is going to tell us everything. This is going to tell us what sectors are looking good and then what industries within those sectors are looking good. You know, so it's really important here to be focused on what's going on. Your consumer staples are over here. So it's really important as a trader to treat trading as a business. Okay, you have to be disciplined enough to say, hey, if you want to trade every day for a living, this is what you got to do each day. A surgeon doesn't go to work and just say, hey, go in the operating room and start cutting and drilling. You have to be prepared. And as a trader, this is what you have to do to prepare yourself each and every day. And what's nice about this is now, watch what the media is pushing daily. I always tell you guys that. We're always listening to the news. Have a trading journal as well, okay? Because at Trading Journal, I always told you guys, I literally got about 100 notebooks here. I write down things every single day, because, either A, sometimes I'm just forgetful. B, sometimes there's so much going on and I forget what I wanted to look at earlier this morning, and 2 hours later, I'm looking at something else. So I like to keep a trading journal. In that trading journal, have your watch list every morning and then add to it throughout the day. And then throughout the day, use one of your screens and say, hey, is this stock doing anything yet? Does anything here interest me? And that's going to be a good indicator for you to see what's going on, what sector, what industry, what the media is pushing, if there's any type of momentum in any of those stocks there. And what's important about that is saying, hey, you know what? Where is my target? Where's my stop? That trading journal, every time you make a trade, you're putting in, here's the stock, here's this price that it's at right now, here's my target, here's my stop, and here's the description of why we're getting into that trade. We made a trade on Workday. It was upgraded. I see an easy 240 target on this. We got the October 16th expo. I said, okay, this is going to be my stop, that 223. Because if it goes below this previous candle's body here, then she's probably going to further retrace. Now you could see, since it had that 1020 cross, since it really broke out and traded above that 10-day simple moving average, it's been holding that 10-day simple moving average. Okay, it's been breaking out, coming down to that 10, breaking out higher now. So where are we looking at now for that stock? We're looking at that 240 resistance as our first target, and then we could look at this candle right here for our second target. And that's how we come up with that 240 to 250 target. Okay, so that's our target profit area. And that's what's really important, because this is our stop right here. If that candle goes below this candle's body, that's showing us that momentum is now shifting, and we're possibly going to see further retracement here. And you want to cut that loss as small as possible before you let those losses get large. So following that trade plan is critically important for you guys. Okay, so for example here, guys, take a look here. So let's just say you took 15% of that $2,000 account, that small account. That's $300. So if you took 15%, that's $300, right? You made that day trade. It makes 45% return, right? So if that trade makes a 45% return on $300, that means you made $135 profit, right? Now, so that's your first trade. So I want you to get into this, because this is an example right here. So I want you to get into this type of mindset. When you make that trade and you have your first gain, then if you go in and just put all your money on that fourth trade and it goes against you, you're screwed. So this is what I want you to get into, this type of mindset. If you took that $2,000 account and you put 15%, that means you're making a trade of $300. So if you make a trade of $300, you make a 45% return. You made a $135 profit. That's not bad for a trade that probably lasted a couple of minutes, 10, 15 minutes. So that $135, that next trade you make now you're going to make a $270 trade, right? So you're using the profits from the first trade plus $135 of your initial capital. So $135 profit from the last trade and $135 part of the initial capital. And guess what? If you have a max loss of 50%, that trade goes against you. How much are you losing? You're losing $135, right? So that means that's only wiping out that first trade that you made. On that first trade, it's not doing anything with that initial capital. It's not eating away at that initial capital. And that's what's really important with growing a small account. You have to utilize the proper strategy to continue to grow that account. Okay. So 50% max stop loss on this small account here is going to save you from blowing that account. Always a 50% max stop loss on any trades less than 30 days out. Anything less than 30 days out till Expo, you're max 50%. Because you know what? If it's longer than 30 days out and we have a 50% stop, that's when we have to look at that chart and say, hey, you know what? Can we buy back the short leg and add to the long? Or should we average down and add to that trade? Because if you still have plenty of time on your side and it's just a short-term fluctuation in the market like we saw last week, then you know what? You could weather that storm and add to that position once you see yourself climbing above that next resistance area. And that's what's really important. And guys, the biggest thing here is this. You know, there's going to be some days that you're just not going to trade. And you have to understand that. If there's no news, no volatility, don't trade. You know, you don't want to be trading markets that aren't giving you any signals. You know, don't be trading markets that aren't giving you signals or there's no news. You're asking yourself for failure right off the bat. Okay, now once you get to a $5,000 to $10,000 account, now you can switch from a cash account to a level 3 margin account. Okay, because this is what's important, guys. You guys know we have a strategy that we like to use called paycheck trades. And that's in the money vertical spreads, sometimes out of the money vertical spreads. But once you get your account to $5,000 to $10,000, you can switch your cash account to a margin level 3 account and work spreads into your routine for consistent growth with lower risk strategies, like an in the money vertical spread with lower risk and lower returns while still focusing in on your other trades. Because once you grow your account from 2,000 to 10,000, obviously now, you know a thing or two, you know, you're doing pretty well. So now if you're managing those trades well and you're able to grow your account 400%, now it's time to put on the big boy pants and say, hey, you know what? Now I'm going to add another strategy to our method and start doing vertical spreads. And the nice thing about this, I'm going to be going over this, is in the money vertical spreads with you guys. Okay. Now you could still be focusing on your day trades, swing trades, but the spreads are really what's going to help you grow as well. Okay. So now we're looking at a large account. So that's a small account. Now a large account here, which obviously is $100,000 or more, you're going to trade 4 strategies. Okay. I put this one here because this one is only going to be for earnings. And you guys know exactly what I'm talking about because you guys see us doing it. Those special iron condors for earnings. Okay. But the main ones that you guys want to be focusing in on are the calls, puts, spreads, and butterflies. Okay. Now you're going to be trading butterflies, obviously, when you feel a stock's going to get up to a certain level, you know, like in the background here, right? So the nice thing about Workday, right, is a butterfly. If you think this is going to get pinned at 240 from now until October 16th, you could pull up your option chain and look at a butterfly and say, okay, I'm going to use that midpoint there, the body of the butterfly. So you have your wings and your body of your butterfly. So the body is considered the short leg, and then the wings are the 2 outer calls there, the 2 puts, whatever it is you're doing, a call fly or a put fly. So let's say right here on Workday, you're doing a call fly for October 16th. You know, you're looking at that call fly. So see how it says buy to open on these outer legs here? So these are the wings. And then the sell to open, this is the body. Okay, so now let me get this up. So let's just say you're saying, okay, I really think this is going to get pinned at 240. You know, but if it's a solid company like Amazon, like Google, like Facebook, and you're saying, okay, there's a good likelihood that's going to get pinned at 240. And that's an actual term in the market, pinning. 30 to 40. Now, see, this is the nice thing about this. So this trade is going to start making you money. Here's your strike price. So basically on this one here, your strike price plus what you paid, that's your break even. break even. So your break even is going to be 230 plus $1.89. So 231.89 equals break even. Okay. Now, if you get up to that 240, that's where you're going to have your max gains at. Anything above 240, you're going to start losing your profits. But here's the nice thing. If that gets up to 240, the max this could be worth is the difference between these two strikes right here. The strike you're buying, the strike you're selling. So from 230 to 240, that's $10. So if that gets up to 240 and this stock pins at that 240 resistance area, guess what? $10, divide that by 1.89, you just made a 429% return. And that's why you're going to see the numbers that we're going to be utilizing for butterflies are going to be much smaller. They're going to be about 2% of your account when you want to do a butterfly, because these are the type of trades that, you know, they're a little bit risky, but they make you very large returns. And the nice thing about this, it's at 227 right now. So another $4 climb. This has another $10 climb like it had today. You're going to have massive gains. You can even sell this at when it gets to 235 for probably close to 100% return. All right, I was getting off track there now talking about butterflies because I love call flies. Okay, now if you take a look here, that large account, that $100,000 or more, calls and puts, you're going to be looking at 3 to 5% of your account on trades, and a max of about 3 trades at a time, 3 to 5 max. So you're going to be looking at $3,000 to $5,000 per trade on a $100,000 account. And obviously, if you're looking for, you know, if you're trading a call that just made a 45% gain, $5,000, multiply that by 0.45, that's a $2,250 gain on a day trade there. So they add up really quickly. It may sound like smaller numbers, but it's really important. Spreads, you're going to be doing 5 to 8%. The reason why it's a little bit larger than your regular calls and puts of 3 to 5% are these spreads that I want you to focus on are going to be spreads that are in the money. Okay, and we're going to be going over that in this one right here. So spreads 5 to 8% on low risk in the money spreads that are looking for a quick 20 to 30% gain. Because obviously you're not going to be able to go and buy, you can't go buy 100 contracts or 500 contracts of a low volume stock there that doesn't have much volume or open interest on the option chain. Okay, so let's just say you have $7,000 vertical spread. It makes 25%. That's a $1,750 profit. And I'm going to show you how easy it is to do this, because you're looking for spreads that must have strikes below support on call spreads and above resistance on put spreads. Butterflies, 2 to 3% of the count. I put that in the wrong place there. Butterflies, though, you're only putting in about 2 to 3%. That should have been another section down here. But so looking for spreads must have strikes below support on call spreads and above resistance on put spreads. Now let's go over that quick. So let's just look at SPY, for example, right? SPY has a new cycle forming, right? So we have the consolidation, right? It's still trading above that 10-day simple moving average, but now guess what? Guess what happened today with SPY? We have that 1020 cross. We had the MACD cross, and we got our first candles above the 1020. We got 3 check marks on SPY today. But you know what's going on in the market. The election's coming up. That's why you got to trade smaller now. But now listen. So where's our resistance? Where's our support areas on SPY? Okay, well, first off, you got some resistance right here at 333, right? That's the number we've been talking about. 333 is our support. Okay, now watch this, guys. If you got a larger account, this is what's nice. The stock's at 340 now, right? We're at 340.97. So 340.97. Now watch this. If we bring up our option chain, and we say, let's look at a SPY in the money vertical spread for October 16th monthly expo, right? Now, since 333 is our support, that means we want both of these strikes for this call spread, if you're bullish, to be below that 333 support. So if we're doing a spread, buy to open, sell to open, for the October, always do the monthly expos. Never, ever do a weekly expo with a larger account there, because you're not going to see the volume in open interest. Okay, so now if we have support at 333, that means we want something that's going to be below 333. Let's say the 331, 332 vertical spread. Now, it's not going to make much money because, you know, it's so much higher than that stock is right now. So this trade here, it makes you max gain as long as the stock is above these two strikes. So as long as the stock is above 332 by Expo of October 16th, look at where it's at now. It's at 341 right now. She's at 341. That means it could drop by, what, 9 points there, and you're still going to make that max gain. Now, if you're going in for about 83 cents, the max that could be worth is $1. So that's why I'm saying look for those smaller gains with the in-the-money vertical spreads for the trade or for your larger account. Divide that by 0.83. That's a 21% return. So these trades here, if you're putting that 7% in, right? So if you have $7,000 in that in-the-money vertical spread, $7,000, multiply that by 0.21, that's a $1,470 profit. Now think if you're able to do this twice a month. So multiply that by 2. What did I just say here? 7,000, multiply that by 0.21. You made $1,470. You do that twice a month, that's $2,940. Times that by 12 months, that's $35,000, $35,280 right there just by making those safe trades. That's a freaking 35% return on that large account by making these lower risk in the money vertical spreads. That's what's really important about growing a larger account. You're reducing your risk. You have less exposure to the market. And then obviously if there's any type of news that goes against you, first type of news like, hey, Trump's not going to do this or that, you get out of that trade and you have a very small loss because you're so far in the money. You're so deep in the money, your loss is going to be very small compared to if you're trading an out of the money vertical spread. Okay. So now with that larger account, what I want you to focus in on as well, and this is really important. I love teaching this part of it. I want you to focus in on two types of accounts. Okay. I want you to focus in on an active trading account and a passive trading account. Okay. So that active trading account is going to be that one that you're looking for the news every day. You're looking for those cycles, those phases, anything you could day trade, okay? Anything you could swing trade. That passive account, I want you to start using. So let's say you bought your $100,000 account, you know, up to, let's just say you made a small profit this week. Let's say you made 15%. Let's just say you made 20% to make it simple. So your $100,000 account after the first week is now at $120,000. You made a $20,000 profit, right? Okay, so if you made a $20,000 profit, what I want you to do is be looking to put in anywhere from 25% to 40% into this passive account. Okay, because if you made $20,000 this week, you know, multiply that by, let's just say 40%. I want you to put $8,000 of that into your passive account. And now once you keep growing this $100,000 account, now your second account here, that's going to grow really quick too to $100,000. So now what you're going to be doing and focusing in on is buying shares in this other account. So I want you to focus in on two types of accounts here. Two types of accounts. One is going to be for your active trading. And then when you make your profits in that active trading account, you know, 40% of your profits into your passive account. And then what you're going to be doing in that passive account there, that could be simple, non-margin cash account, because you don't need anything else what you're going to be doing with that. All you're going to be doing is trading shares, covered calls, and looking for high dividend payers, high yielding dividend payers. Okay, so that's what's the nice thing about trading is once you start growing that account above $100,000, now you could be utilizing those profits or a portion of those profits, put in that other account for that longer term growth there. Say you find a stock that you like for the next couple of years out, you know, you could buy some shares of that. And then you could be selling some monthly covered calls against those shares and bringing in 2 revenue streams from that second account. And that's really important, guys, for growing that account there. And then, like I said, what's nice too is looking for those dividend payers, those things that are going to pay you, you know, 10, 15% every quarter. You know, that's going to add up. And that second account, you really don't even have to do anything with it. You set it, you forget it, and you could look at it once a week there. And then you're focusing in on that active trading account. Again, active trading account, you're looking for trades that are 30 days plus to expo. That's going to lower your risk. Your spreads, you're going to be looking for new cycles forming from breakout momentum to breakdown momentum, or from no trade zone to breakout momentum, or from no trade zone to breakdown momentum. On those new cycles that are forming, that's where you're going to be looking to put in 8% into the trade when you have a new cycle forming, and look for that 30 days plus out till expo on those new cycles. You're going to be focusing in on calls and puts for day trading. And remember, you're going to be day trading news only. You have to be disciplined. Wait for those news events that are going to give you that paycheck. Okay? Follow the trade plan. Follow your targets. Follow your stops. I can't stress that enough. I post every day the same charts. Here's our targets. Here's our stops. And like I said, here's the website here as well. That's going to show you. If you don't know how to do it yourself, the website, if you go to trades and trade alerts and you click on any one of our trades, it's going to show you right here. Here's our target. Here's our stop. Sometimes our stop might be 50%. Sometimes our stop might be the 10-day or 20-day simple moving average. Other times it's going to be support areas if it's closer. So always take a look at this. And like I said, if you have a trading journal, that'll help you as well. 25% of your profit each month goes into your passive account, at least 25. I like to do 40%, sometimes even 50%. When you have a big week that you make $50,000, throw 25 grand in the other account. You know, that's easy to do, and you're going to build that other account, and then you're going to have that second account, you know, that's making you money while you're trading, you know, and you're not even watching it. So 25 to 50%. 40% is fine. 25 to 40% of your profit each month goes into your passive account. Your passive account, you're going to focus in on trading shares and new cycles, and you're going to be selling covered calls against those shares. So you're bringing in 2 revenue streams from the shares going higher and from collecting that premium from selling those covered calls. And then you could also look for high yielding dividend stocks with growth potential. So you're collecting that dividend, and you're also collecting as the shares go higher. And then in between there, if you want to get technical, you could be selling covered calls against those as well for 3 different types of revenue streams on that one stock. But that's what I want you to focus in on. So with the small account versus a large account, this is options trading, and here's the strategies, right? $2,000 account. Here's the percent capital per trades. Percent capital per trades. On calls and puts in a small account, you're looking for 10 to 20%. Okay? On a larger account, 100,000 or higher, you're looking at 3 to 5%. Okay? So 3 to 5% on a larger account, $100,000 or more capital per trade. A small account, $2,000 plus, you're looking for 10 to 20% of capital. So a $2,000 account, you're looking anywhere from $200 up to $400. Okay, so $200 to $400. And on a $100,000 account, $3,000 is going to be anywhere from $3,000 to $5,000 per trade. Now, getting back to it, max number of trades, 1 to 3. If unless you get above 5,000, you're staying with 1 trade. If you get over $5,000, then you could be looking at 3 trades. But focus in on 1 trade at a time until you grow that $2,000 account into over $5,000. That's critical, guys. $2,000 account, 1 trade at a time. Because if you start making more trades and that other trade goes against you and that other quick trade makes a quick 40% loss, now you're screwed. Now that second trade, you just need a 40% gain just to break even again. So focus on 1 trade at a time when you have a $2,000 account. When you get to $5,000, you can make 2 trades at a time. When you get to $10,000, you can make up to 3 trades at a time. Now, max number of trades once you grow that $2,000 account up to a $100,000 account is 5 to 7 trades. And that's going to be some of your different types of strategies, your calls, your vertical spreads, and things like that there. Some are going to be day trades, some are going to be swing trades, some are going to be vertical spreads. Okay. Now for anything, your max stop loss is always going to be 50%. Always a 50% max stop loss, whether you have a $2,000 account or $100,000 account. Number of accounts. When you have a small account, obviously you have nothing to do with your profits yet. You're growing that small account. Once you get over 100 grand, now you're really trading for a living and growing a wealth of knowledge and a wealth of money. So then you're going to start to have 2 to 3 types of accounts. So you'll have your active trading account, your passive account, and then that third account, once you get to that stage, that's going to be your profits for you to start enjoying life and buying the finer things in life. So that's what I want you guys to focus in on when we're options trading, okay? There's different strategies for different types of accounts and different size accounts here, and you got to be utilizing those properly there to be continuing to grow that small account. Because once you grow that small account, you can't be using that same strategy for a large account, or you're gonna totally destroy that large account there. You have to take a little bit more risk when you have that smaller account to grow that. And as you're growing it, then you're adding new strategies like spreads and butterflies. You're not trading that in a small account. But once you get that to a large account, now you could start utilizing those different strategies to earn additional income and revenue coming into that account. All right. I hope everyone enjoyed tonight's class, and I hope everyone has a really great night. Take care, guys. And of course, if you have any questions, please let me know, and I will definitely get back to you. And you guys could also email us at support@breakingchartalerts.com and be happy to email you as well. So